OptionsHouse. Joe got on me. I was a little bit late today. A lot of black ice out there. Did anybody have any spin outs today? Anything fun like that?
No spin outs, but I just want to point out that Joel was 35 minutes late to work today.
Hey, when I start getting paid by the hour, we'll start counting that, right? Okay.
Well, all right, Joel. So tell us what was going on out there today.
I don't know. I didn't see any accidents. It's just slow driving. People are just I guess being careful with this black ice. So, but I'm here. I'm ready to go. Dennis, you tuned in yet?
I'm here. I'm ready to go. It's a
Okay.
lot of excitement here today.
Not really.
We're- Actually, there's a ton of excitement in the markets. The markets aren't moving around much, but individual stocks, all the analysts got out there. They're not late today. They're all here, Joel, and they are upgrading and downgrading the entire world.
Before we do
Emira,
that,
Citigroup, Deutsche Bank, those guys are absolutely crazy today. They've done so many upgrades and downgrades.
okay, we'll get to them in just one second, but let's look at the very interesting technical formation we have going on in the S&Ps, Dennis. And what do you think I'm going to identify for our listeners?
Oh
On,
boy, what are
on,
you going to identify here?
on the
You got,
upside,
you've probably got a bearish scenario for us, do you?
yes.
Well, talk to me. After the 100-point Dow rally yesterday, talk to me about your bearish scenario.
Quadruple top.
A quadruple top. Where is
Yes.
this at?
Last four highs. Well, right, today's going to put the fourth one in place. 33 even was our low on Friday. Friday, Monday's high 32 and a half. Yesterday's high 34.75. We've only reached 33 and a quarter. So right there, four potential highs within 2 points, a little over 2 points. That's a big level where we are not getting through that today. We are not getting to, and I'm ready to go, Dennis. We
Wow.
are
So
not.
you're just like getting short the world here then if we get up to that level.
Okay, I want the two lunches that I'm down.
Oh, you're
Okay,
betting again. He keeps
I
betting from the
know.
hole, folks.
I'm gonna take care of the
Two
lunches on
lunches
this.
Digging
and a
a
steak
hole.
dinner.
Joel, you
They'll
need
keep
to
you.
go home and watch the movie Casino and finds out what happens to people that make too many bets over their head.
Dennis
I
never.
heard I heard Joe's got you too. Joe's got you on a dinner or a lunch too there.
What do we got? 150 versus 140 versus 160 in Buffalo Wild
No, I
Wings.
think it was 142 versus 152.
We got to watch that Joe guy. He'll change the bet afterwards, though. So you got to write it down because he'll change that bet.
Yeah, I can't remember. I'll have to look in the archives on that one. But Dennis, Mr. Super Bowl, you probably think we're going to close above that triple top today. We're going to take it out. You probably think we're going to close above 1835 today.
Sitting on my hands on this one
Okay.
today. I'm kind of indifferent.
Okay.
Sometimes you come in, you're really bullish. Sometimes you come in, you're really bearish. This is one I'm coming in like, I don't really got that great of a feel here right now because you're right. We got a big level there at 1833. If we can take that out, we could be moving back up to the highs. But what is the all-time high, by the way? Just to refresh my mind.
We got a little bit crazy. I didn't believe it was on
It was
the last
January
day. Yeah, the
3rd,
last day of the year, they
December
just
30th.
juiced it, and they got it up to I believe 49 was the high.
Was it 1849? Was it that high or 45?
46.50.
46.50.
Yeah, that's the
So
all
it's
time
17
high.
points off.
Yep, the all time high close 1841, and it's just been nothing but down this year so far.
Well, all the Momo stocks are not helping here because you got Twitter, which absolutely gets
Oh,
destroyed yesterday. And not only gets destroyed yesterday, but all of a sudden we got Cantor Fitzgerald this morning slapping a sell rating on the stock, downgrading it to sell. Price target $32. 61.46 is where it went out. It is trading at 59.78 right now. Twitter not looking that good all of a sudden.
oh boy! I tell you, just this one somehow got off my screen yesterday, and I just don't know how I let that happen here. 59.40. No, excuse me. We've been lowering that. 59 and a quarter has been the pre-market low, but we got a big level to keep an eye on here. 58.57
Yep.
was the low on the first shellacking. I can't remember who downgraded it there. We're a buck 40 away from there. That is just what a huge level. I mean, first time down, I think I'd try and cover short or look for a
Yep.
bounce. After that, $55 has Twitter's name written all over it.
So
That
I'm looking at the Cantor note. The analyst saying that the valuation of Twitter versus peers like Google, LinkedIn, Facebook is quote excessive, and he's expecting quote materially more downside.
materially more
Materially
downside.
is the specific word.
What's materially more down? Dennis, you use your CFA knowledge
A,
there.
a material must be more than your scalper blood would say, which is the $1 that we look at is 58.57. I guess it's more than that. So I don't know. I don't know. Everybody would define material pretty differently, I would think.
Yeah, it was nice. I mean, it that the way that I tried to play it when I bought those puts was, you had the big break, and I waited for a rebound, and I got in the
So you
rebound.
covered the
I
puts.
did. I covered it. I covered it on Monday. I was a long-term trade. I put it on Thursday. I
Uh,
took it off on Monday. I had. You know what I had? I had the 65s. Those things are almost off 5.5 sticks in the money, and then you put the volatility and the premium on that. Those things are
probably
probably
worth
worth.
$7 or $8. $7 probably.
And you know what? And I did, what I've been telling you I was going to do. I was going to give, instead of buying the weeklies, I automatically go out and buy, the next week, and to give myself a little bit more time. But
You didn't do that either, did you?
yeah, I just yeah, whatever. We'll see what happens now. I mean, you got to be brave here to short it in the hole, though. Down a buck
You're
80.
chasing it now. I mean, the stock, let's look here. The stock was $68 or almost $68, got up to 67. What's the high yesterday? Opened up right near the high. 67.73, the high yesterday. Opened up at 67.67. So if you sold the open, you only took 6 cents of heat on this Twitter there yesterday. And then it sold off to straight $6, down another two. You're now chasing at 8 points. Very, very difficult to chase a stock this far. There's all air above you. There's obviously a lot of air below you here too, except 58.57. I agree with you on that one. That is a huge number here. Love to see that hold today. Try to put in a double bottom here. Maybe, if somebody comes out, upgrades or something later in the week. But if that 58.57 doesn't hold, it could get real ugly here for Twitter. So it's got to hold that level.
And
That
it's really interesting too how it cascades the entire day, settles just off the low of the day, 7 cents, and then you get an upgrade. You wonder if Canner was out there whacking this thing yesterday, or had a big client out there whacking it.
Somebody was whacking it because stocks just don't fall $6 on no volume. I'm assuming the volume was through the roof yesterday. I didn't look at it. If you have that in front of you, you could tell us. But that was just an
Think
absolutely incredible sell-off.
you think we'll see yesterday's low, 61.39, 61.46 close at
On a
the.
pop,
Yeah,
you
yeah.
never know because these short squeeze, funny things can happen when you have a stock fall $6 like that. You have a lot of people that were short the thing all of a sudden sitting on a lot of profit. So you could get a squeeze here eventually if it started going in the other direction. But I don't know. But you want to talk about a short squeeze? You want to talk about a cool short squeeze, Joel?
Yes.
BlackBerry, BBRY. That stock is popping here again this morning a little bit, but man, this has been on an incredible tear. December the 20th, the stock was $6. It is now 8.65,
No
and this is a
way.
classic example of everybody leaning the company going to zero, and it's just not happening here right now. And the stock lifting nicely over the last 2 weeks.
News? News. There's
There
got to
hasn't
be
really been
news.
that much
News.
news. Was
Brent,
there an
I want
upgrade
you
or
to get
anything?
on the
Brent,
what?
was there anything in the last 2 weeks on BlackBerry material? Material news?
The only news is that like the
Reynolds number.
one remaining person I know that has a BlackBerry switched to an iPhone last week. That's the only news I have.
Oh, the last one.
Yeah, yep. Well, not my
I have
last.
some other news, Joel. 14 in Orchard Lake. Remember the BlackBerry store?
Yes.
That building is not there anymore. It switched from BlackBerry to just like a retailer cell phone store, and they just tore it down a few weeks ago.
Tried like 2 months ago.
Yeah, yeah, a few weeks, few months, whatever.
You only go by that intersection every day, and you just notice that.
Well, like I catch Northwestern
Okay.
before the intersection.
I don't
so-
know, Dennis. I mean, so
That was
there's
the only BlackBerry retail store.
in the world.
I think so, yeah.
Jesus, Murphy, look at this move yesterday. I mean, I remember this thing stalled out at the 777 level. You had two tops there, double top. It took that out yesterday. It was off to the races, or excuse me, it took that out on Monday, and there's just nothing in there. What do you think? Is that guy still there at $9? What's his name? The guy that the Canadian Warren Buffett. What's his name?
Fairfax Financial.
Yeah.
Remember they were trying to say, oh, we're going to take the company private, and they were going to go up there because they own 10% of the stock, and that just didn't work. Everybody called the bluff there, knew they wouldn't get financing for it, and the stock went from 9 down, obviously, to the low when it got down to 544. But it's back now. I mean, here everybody had it for dead. This is what happens. Everybody has this thing for dead. They're like, oh, $6 a stock at that's just a free $6. This thing's going to zero. Not so fast. The stock's up 45% here in the last 2 weeks. And this is your classic short squeeze. Everybody was just leaning the wrong way on this thing. I'm looking through the news wires back from the 20th. I'm not really seeing anything crazy that would really cascade. Hudson Square downgraded it to sell on December 23rd. Oops. Also looking here.
There,
Well, Veritas Investment Research upgraded BlackBerry to a buy and put a price target of $10 on December the 23rd. So maybe we should give them some props because that's pretty impressive. They raised their price target from 4 to 10, so they got bullish back on December the 23rd.
pre-market high 873. You haven't traded at this level. You need to go back all the way until what, late September? Yeah, late September it hit 920, and then that's when Mr. Fairfax there, whatever his name is, was talking about that. I think that's going to be an interesting level. I don't know if it has the juice to get there today, but certainly turn around. There will be news coming out. We just don't know what it is.
I think the news is just the thing was a whole short squeeze, but there's always news coming out. So we'll
Wow.
find some more news here for you eventually on BlackBerry, but this is your classic short squeeze.
Wow.
Circle that whole move from 6 to 850 right on your chart, short squeeze.
May,
That's what that is.
maybe get a little pause here after because it had that 3 day move up from 6 up over to 750, decline back to the $7 level. If that pattern continues, long way away from $8. But maybe if you're trying to be patient, you want to re-enter this on the long side. Maybe wait for a pullback to the $8 level. But right now, the momentum's going the other way.
See Ford popping last night. Ford getting a good pop. Alan Mulally staying with the company until through 2014. Ford popped up to 1565 on that news there after hours last night. It's at 1558 this morning. They were speculating he might go to Microsoft. So then Microsoft turned around and started selling off on that news. Microsoft actually last night got under $36. It's back up at 36.22, but interesting move for those two stocks.
Ford is just kind of been crawling off that $15 level. Has two highs at 1574 and 1576 during the pre-market action there. Got the not really the first pop got it up to 1570, but does someone have a piece there at 1575, Dennis, or is it just good old fashioned selling there? 74.
Starts to thicken up above 1565 a little bit. I don't see anything crazy, but when you look at a chart, when we see a double top there, we always think maybe there's some institution even hidden there. I mean, so many institutions use algorithms, use hidden orders, so just because you don't see something on the book doesn't mean there's not some huge institution taking a piece off there. And when you see a double top, it often is the case. So it wouldn't surprise me if it struggled. If it does get up another 15 cents from where we are right now, probably will start thickening up.
Hey Dennis, I wanted to note that it seems that it is still a report. I don't think that Ford has confirmed anything yet. Apparently Malali told that to an AP reporter, and that was
Okay.
coming from the
So
AP.
Associated Press, they were the ones reporting that?
Yeah, I mean, effectively it's pretty formal, but no actual statement coming out from Ford yet.
Okay. So we're not totally confirmed on that yet, but the market's already pricing it in.
Yeah, let's take a look at Microsoft. Just kind of been selling off a little bit. Got way overdone there in the 38 handle. Coming down now, getting a couple lows in the 36, 36.11, 36.21. That coincides with some lows that you had back in December, 36.08 and 36.19 here. So Microsoft, despite this news, it sold off overnight. You said it took a hit. Probably, yeah, it took a big hit on that. They even got it under 35.60. They took
35.60 they went down to.
lower,
Wow.
lower, 35.41. Dennis.
Holy cow, that got a little bit overdone. That's ridiculous. So if you're after hours last night, Microsoft sells off almost a dollar on a report that they didn't get somebody. That
hundred
seems.
thousand shares. 100,000 shares traded on that in that bracket.
That's the problem after hours too. Liquidity is so much lower, so you get somebody like, oh my god, I gotta get out of this thing, and that's what
But
happens,
who would
obviously.
trade that kind of size? I mean, the way Microsoft moves. I mean, how could you fathom selling stock even under $36? I mean,
Yeah,
wow. Someone
for
got
for
it
Microsoft to go down a buck, it needs to trade millions of shares. When
right.
you're looking, and that's how you can really look at the after hours. Look at the volume sometimes on these moves, and if you're seeing Microsoft trade down a dollar on 100,000 shares, you can say, that's really not enough volume to get this thing to trade down that much. It needs to trade a lot more shares than that to really, obviously, trade down. It's traded 210,000 shares here this morning, up in the 36 handle, so it's going to open down. I don't think it's got a chance in hell unless the market really goes for a sell-off and Joel's scenario, bearish scenario, comes to fruition. It's the only way you're going to see that 35.43 low on Microsoft
They
again.
should find someone to replace Balmer soon, though, shouldn't they?
Huh.
It would seem.
But Microsoft's been doing well. You think they want to get rid of Ballmer? The stock had its best year in how many years
He
last
said
year?
he's quitting now.
Is it? Yeah, I was gonna
Is he, oh,
say.
did he say? Oh yeah, that's right. He did
I'm
say he's
thinking it's
quitting.
his decision. I guess. I don't know.
I
That's
forgot.
that's on
When is he
Microsoft.
supposed to be stepping down?
It's not for a
Uh,
while.
I think was it the end of this year maybe?
Yeah, he gave him a while. Yeah, didn't he like cry at some presentation that he did or whatever?
I think Bill Gates got a little emotional also.
Yeah, he went to Cranbrook, didn't he? Or
He's a local guy.
yeah, Cranbrook or yeah, and Lawrence Tech for college. So hey, a Michigan educated boy.
Woohoo!
Maybe he can come back here and work at Benzinga.
I think we've offered him something already. I know
Okay.
that he's
It's
gotten back
true.
to
Yeah, I
us.
mean, we make offers to Steve Ballmer all the time.
Gentlemen, we are getting
Detroit
a little.
Country Day, Joel,
Ah,
and
Oh,
Lawrence Tech, and
Uh,
then Harvard.
boys,
Harvard.
boys, we are getting a little movement in the S&P futures right now. We did just have the ADP employment data that came out. 238,000 for the month of December, and the street was around 200,000. It was initial spike to I see over 1830. Now we kind of came back. I think we touched under 1828. Now we're at 1828.75 on the S&P futures.
Kind of a slow melt here. Nothing to get too excited about. Uh, Yesterday's low was 1950. Still got a good $10 to go through there, but a good number to keep an eye on ahead of that 1950 level is the intraday low, and that's a number I keep an eye on too. And Dennis, explain to him what I mean by intraday low.
I mean, trading during the regular session. So we obviously have our pre-market low or overnight low. We can have an intraday low, and that would be a low that was made while obviously the regular session was on.
Yep, 9:30 until 4:15, and that level was 26 and a quarter. So still 2.5 points away. That's our first level of minor support.
We got so many upgrades, downgrades.
Okay.
We're going to get to them in just 1 second. I want to top into a couple of earnings stocks here because you've got Micron, symbol MU, with an incredible rally going on. I don't think anybody probably priced in this much volatility in this thing. It's up 10% right now in their report. X items, they reported 77 cents against analyst estimates of 44. Now, it was kind of funky getting there because they really only reported 30 cents. They had to take out a whole bunch of stuff to get to that 77-cent number. I guess the market doesn't care though, because this stock is popping $2.20 right now. That's an incredible move for this company.
DRAMs, right?
DRAMs and all kinds of fun
Man,
stuff there.
I know that kind of stuff. Pre-market pop over the $24 level. 24.48, Dennis. If you were out there selling at 24.47, you could have gotten done because that's where they took it up to.
Where did it get to? 24.47?
48.
Holy cow, man. They love to overdo stuff here. This feels overdone, but we know how this market goes. It can continue to overdo stuff. This is a new high for Micron. This is a high that we have not seen in Micron. I'm going back to the monthlies. I can't even go back to the monthlies. You got to go back to the tech bubble here. I'm back to 2005. How far can you go back there, Joel, on your chart?
I could
2000.
I could go back farther, but first I want to alert our traders that since we've made that ridiculous high, 24.48, 24.10 has been the high over the last half hour or so here. So 24.10, 24, nice round number. I think you're going to see some consolidate. That could be a level ahead of the 24.48. And let me go here. I am now going back. This is the highest level that this issue is traded at. It traded in August of 2002. It traded up to 22.67. And
This is a
then
11-year high.
Okay, and then in June, here is the number of the day in micron. If you've been
Can we see the
holding,
chart? Do you got the chart of
oh,
that?
let me see here. Yep. Hold on one second
We
here.
want to see this.
You want to see it? Okay, no,
Show it
that
to me.
goes too far. I wish I could get these sticks, but if you go back to June of 2002, if you've been holding on to your micron and averaging down since June of 2002, it had a high at 24.30. 24.30, and in that same month, it hit 16 bucks. Actually, yeah, in the same month of June. So 24.30. That coincides with the pre-market high 24.48. I don't think this thing
Look at
can.
that tech bubble, though, on that chart. That shows you that tech bubble way back in the day. If you did not trade stocks during the 90s and the 2000s and be part of the tech bubble, I did. The stock got up to what, $95 during the tech bubble? So
Yep.
14 years later, the stock's at 23. So if you bought this thing during the tech bubble at 95, that tells you do not buy stocks during bubbles. This is what happens to you. You may never ever get your money back. And 14 years later, Micron shareholder that bought it at $95 is still saying 23. I'm supposed to get excited about this.
Yeah, 97.50 was the all-time high back in July of 2000.
Tech bubble.
So,
All the tech charts, when you look at them all, they all look like
and
that.
one
Like
day,
Microsoft never got back there.
no.
So many, like big companies too. Like some obviously have made new
Oh,
highs,
you
but
could.
so many never got back to those levels.
Oh yeah, Microsoft was over a $50 stock. Yahoo, how high?
Yahoo might be.
Now Yahoo got to like 125, I
Oh
think.
yeah, you're right. Oh no, I even got higher. Bring up the Yahoo chart. Maybe I remember 250 on Yahoo.
Did it do a split? Did
I
it?
don't know. Is that what you've got for? You've got
Yeah,
125. Yeah, so
yeah.
maybe it did split or something, or because I remember 250
And
Yahoo price.
what's the symbol for Enron?
You won't be able to bring up those though.
Very
If they're
funny,
probably not in the
Joel.
system anymore. Wasn't it like ENE or
Yeah, it
something?
was. It was the NE. Man, that's when the markets were fun to trade. That
They
was
were funny. I
yeah.
remember buying, like, bring up even Amazon back then. Like, and obviously Amazon's higher now and it's split or whatever. But I remember Amazon. I'd buy that thing at like $100 and sell it like 2 days later at 130. It was just
Mhm.
crazy trading back then. Stocks, everything you bought, if you just bought pullbacks, it just went up until 2001 when everything you bought just went to zero.
Yeah, that's when that was great. I remember the squawk that we had on in March. I don't know what the event that triggered it in March of 2001. And it was intraday too. It wasn't something that happened overnight, but that was just hearing those S&Ps fall out of bed. Now when you listen to the squawk, it's I don't know. I mean, I just watch the minis because they're like 2-3 seconds ahead of the pit.
Yeah, it's a lot different. So the tech bubble doesn't look like much in Amazon because it actually was one of those companies that was real. They were just coming out and this online retail, and then they punished it down. And what did it get down to after the tech bubble? Probably in the single digits. That would have been the buy of a lifetime because that company actually did make it. It was one of the few that actually did survive. There's so many companies that were basically just ridiculously valued, billions and billions of dollars. They had like 5 employees and an idea, and that was good enough for a billion-dollar market cap back during the tech bubble. That was a bubble. You can say, some people say we have bubbles here today. No, that was the bubble back in the tech bubble of 2000. That was the biggest bubble that I've ever seen.
Back in October 2001, Amazon hit 551.
$5.
$5.51.
$5. Wow.
51 cents. Wow, that's our history lesson for today, folks.
Yeah, nice history lesson. Apollo, APOL, education provider here, trading up pretty significantly on their report. It's up 9% this morning, $2.46. Reported $1.04 versus 90 cents. APOL, 856 million versus 860 million, so slight miss on the revenue. I guess they don't care. They kind of was a whipsaw right after the report. It rallied really hard up in the 29s, pulled all the way back into the 26s, and then rallied back up and is now trading in the 29s again. So kind of all over the place, the Apollo Education Group.
APOL.
OL, you
Yeah,
got it.
yeah, having a little problems here with bringing that symbol up. First, let's look at the pre-market trading. Got over the $30 level. Got to 30 and a quarter. Since hitting that 30 and a quarter, we've just kind of drifted back, finding support just above the $29 level at 29.20. And going, let's see if I can find something on the weeklies here. You did have a former high at 29 going back in October, so that'd be the key level. It stays above 29. Got a chance to rally. I think if we fall below 29, there's quite a bit of air in the issue.
Let's go into some of these upgrades and downgrades. We already told you there about Twitter being downgraded to sell. You've got some other big stocks moving here this morning. Even McDonald's. McDonald's getting downgraded at Wells Fargo here this morning. MCD trading down at 95.55 right now. Went out at 96.38. This stock had major resistance up there at 97. If you were on it
Wow.
yesterday, it got up there, gave you a shot right off the bat, rallied right up to resistance, turned around, sold off on a dime, sold off a buck after that, closed 96.38, obviously trading back down here to Monday's lows.
It is. Yesterday's low 95, or excuse me, Monday's low 95.52. We are trading at that level. In the pre-market, how low do we get? We're just slumped on the lows here. Not a lot of volume. Go to the dailies here. Below that 95.50, don't get too carried away. There's another low at 95.34. So if you're going to try that 95.50 buy here, you could see another 15 cents of downside, 95.34. I'd call that the bailing point. Under that, you can slip under 95, 94.93 was the low on December 19th. But a lot of this time with these stocks, I mean, this is not that big of a down move for it, but a lot of times when Mickey D's has that, $2-3 move in the pre-market, it usually is a pretty good fade. We'll see what happens today, but we've been talking about this stock for a couple years, and it's gone nowhere for a couple years. I mean,
A lot
considering,
of
yeah.
consolidation, yeah.
I mean, I was going to say, look at if you go back to the beginning of 2012, this was a big performer in 2011.
hmm
Every
And 2010.
and yep, 2010, 2011, and then did not have a good year in 12. Battled back, did nothing for the considering market relative value, did nothing in 13 here, and it's just been hanging out around $100. Has not been able to get over that. For it to sit, I mean, what's the yield? It has a pretty good yield on it, right?
It
So.
is 3.36%. That's not bad. So it's not super high, but it's a decent yield, 3.36%. So that helps it too. It becomes like stable. And when you have a higher dividend, the stock price obviously stabilizes a lot too, because you got a lot of income players and doing stuff in there. But I think this is more of a fact that you're right, Joel. It had a huge run in 2010, had a huge run in 2011. It's had a couple years of consolidation here. That's what happens when stocks kind of get a little bit overdone there. They need to pause. They need to let the earnings catch up with the price, and that's probably what's been happening with McDonald's. I know back in the day, if we go back to the tech bubble talks again, Walmart just went up and up and up forever. If you bring up the Walmart chart long term, it went up to like $70 back in the year 2000, and then consolidated for a decade or even longer than that, consolidated for 12 years before it started to actually run up here again. So this can sometimes happen. And the PE multiple back on Walmart was like 45 or 50 back in 2000. Now the PE is like 12. So the earnings have caught up basically to the stock price, and it caught up to the bubble prices that Walmart had.
Uh,
So it's not saying the same thing, but it's kind of, I'm not going to say McDonald's going to consolidate here for a decade, but it's letting the earnings catch up here a little bit.
and
So a
I
couple years consolidation is probably healthy.
And I remember the driver. I remember what the driver was when to turn that Walmart around. What
No, what was it?
actually it sold off really hard because they were bribing officials in Mexico. You remember that for their stores? This must have been,
Yeah, something. Yeah.
and they
Yeah, I do.
killed the stock off it. I think it might have been in 2012 when you had this dip, and then it just sold off, and then that just kind of went away and it just turned around and rallied. We're going to have Brian Sozzi on, and he's a retail analyst, and he's come out with a bearish thesis on Walmart. So when we get him on here in about 15 minutes, we'll discuss his reasoning for shorting the slow moving, but surely been an incredible rally in this stock. 2012 and or 2013, big move for
Go
the Z.
back to the 2008. Can you go
Yeah, sure. 2008, right here.
Did we just lose Dennis?
Yeah,
I
I
think
think
we
we.
did. Let me see here. He'll be back momentarily, most likely, because he just can't stay away for very long. So, what was the chart you were pulling up there, Joel?
He wanted me to look at. He wanted me to look at 2008, the Walmart chart there, and that's when it sold off and it had wicked consolidation around the $50 level. So we'll take a keep that's quite a ways away from here, but to get a better perspective on Walmart, just because we're a little bit more shorter term traders here, let's look at Walmart on a daily perspective here. Been finding a good support at the $78 level. Had two lows at 77.79 and 77.92. Still a good 50 cents away from that. So 78's been a good support back on the upside. Yesterday's high. We've actually have had three lower highs in the issue: 79.47, 79.13, 78.91. So let's call 79 to be the resistance level for Walmart.
Hey Joel, it looks like we're gonna have a little ammo for Sozzi. Just getting some news out of J.C. Penney company issuing a release saying that it is quote pleased with its performance during the holiday period, and it looks like J.C. Penney is also reaffirming Q4 guidance.
Okay, we're definitely going to have to ask Sazi about that one.
Oh, we just spiked down to we were trading around 820 in JCP. We spiked down to 766, and now we kind of bounce over $8, but I see a last trade around 795 in JCP.
It sounded like it was good news, though, right?
Uh,
I
it
mean, they
seems
reaffirmed
like it.
guidance.
Yeah, well, I don't know. This could be the case where maybe the street was sort of anticipating maybe like a slight boost in their guidance, so maybe the street was a little greedy on this one.
Okay, well, they don't like it as the price action is dictating here. Let's take a look at the daily charts. We're starting to come down here. We just see what the spike was. The spike in the pre-market just went down to 766, and it looks like that's not going to hold up either. Just made a low at 765. Going back here, you did have a low at 763 on November 6th, and then you also had a low at 757. So theoretically, we're on support here at the 760 level. We'll see if that can hold up in the pre-market and get a little bit of a bounce. Did have good consolidation between 8 and 9. Testing 1 2 3. Testing 1 2 3. Jared says he hears us. Testing 1 2 3. Testing 1 2 3. Yeah. Okay.
to?
Hey, Dennis.
Joel, you've killed the volume on the show too? Because I don't hear the volume on the show either.
Um, These guys say we're A-OK. Our three most reliable people, Jared, J-Dot, and GGB. You guys hear Dennis, too?
Without those guys, I don't know what we would do. But we've got Dennis back now, ladies and
Okay,
gentlemen, so
yeah,
we
you're good
can
now.
get on with the chlorophyll.
Sorry, guys. Technical difficulties. Those gremlins, Joel. The
Don't
gremlins got us
blame
here
me.
again.
Everyone's like, "Well, Joe, what did you do?
Well,
What'd
you
you
It
fed
was
do?"
you
it was
fed
the
that one
gremlins.
after
It wasn't
midnight.
Joel.
You fed the
Yeah.
one after midnight last night. They get so upset when you feed them late.
Start just tearing up the place. They're tearing up the Benzinga office here right now. All
Okay.
right, we're back. I don't know where you lost me. I was going on a little Walmart story with the options. I'm not sure
Okay.
if that's what
Yeah.
you lost
Go
me.
back. You were going back to 2008 in Walmart. That's what.
Uh,
That's where you picked up.
okay, so basically, I was just telling you from 2008. I was trying to tell you ways you can make money when stocks go sideways, and we obviously had a move from 2008 where the stock was just stuck at 50. I identified this fairly early, bought the stock for my investment portfolio at 50, kept writing upside calls. I turned around, buy the stock at 50, write the 55. So if you bring up the chart from 2008 to 2011, you can see the sideways period. And then the calls would expire worthless. I turn around and write them again. Calls would expire worthless. I turn around and write them again. I kept taking $2 off it, plus getting the dividends. So actually, those returns were pretty solid. So I'd write like 3-4 months out, taking the $2, and obviously collect the dividend for that period as well. I actually did that trade probably 6 or 7 times. So during that period, I think I took $15 or $17 worth of call premium out of the stock, plus got the dividends. So probably got a good 20 to 22 points on a $50 stock over the course of a couple of years. So here's a stock sitting in your portfolio doing nothing. But just by writing those calls, I was able to extract a lot of premium, get my basis way down, obviously, on the Walmart, and it worked out really well. So just there's lots of different ways you can make money in this market, and if the stocks go sideways, you can still make money just by using options.
Did it ever get called away from you?
And that's why I'm not doing it anymore. I would have did it forever, but I eventually did get called away. The stock. I eventually got aggressive. I can even remember I wrote the 50s. I think right in 2011, I was like, I'm going to get really aggressive. I wrote it in the money because I was like, oh, even if I get called away at 50, I'll re-get it under 50. And I think I got like $3.50 for the 50 on the 50, and I had bought it at 50 earlier. So, but then eventually, obviously, the stock took off to 60, and I was like, oh, I'll rebuy when it pulls back to 50. Well, it never did, so I never got it back. So now it's up at $78.
You may want to you may want to cancel your GTC order at 50.01.
I'm still there. I'm still trying to buy it at $50. One day, maybe I'll get Walmart back at 50, and I'll be like, I know what to do. I'll rate the calls.
Yeah, if it gets back down to 50, you probably won't want it.
Probably not. So if it gets back down there, I'll probably do it though.
Okay, do we have any more upgrades, downgrades to talk
Let's
about?
fly through a few of them here because there's some big ones. Honeywell downgraded
Honeywell.
at Citigroup. HON. Stock is trading down here 60 cents on this. Interesting. The stock actually put in a potential double top there yesterday, 91.56. I guess you can I guess you can't really say that. No, I'm looking. I had my weekly charts up again. I've got the gremlins in my chart.
91.14, 91.26, and then you had another high at 91.14. So
That's
three out
just
of the four highs in the 91 quadrant. The other high 90.96. But look out below $90 in this one, Dennis. If you got
a little bit there.
yeah, if you got that in your portfolio, $90 seems to be a very good level. Very spotty trades here. Maybe it's time to take off your GE Honeywell spread.
Yeah, the GE Honeywell spread. That's what everybody in Bright was trading back in the day. They had that merger on. It was merger arb, and the deal fell through. And then Honeywell dumped so hard in GE, but actually, if you held it, it worked out because GE is a lot lower price stock than Honeywell is now.
Does Bob still
But
have that on?
I don't know if he does. He'd be really happy with it.
Okay.
I'm assuming he's long gone on that one now, though. This is a decade later. Let's fly through these upgrades and downgrades.
Okay, I'm not going
Let's
to talk
fly
anymore.
through a bunch of them. We'll leave the technicals because we are running short on time. So we got Citigroup. They're putting a pair trade on. CME, they are downgrading. NDAQ, they are upgrading. NDAQ trading up 40 cents. CME down a buck. Tyco getting upgraded at Citigroup. TYC. UTX downgraded at Citigroup. Then you got Deutsche Bank. They're doing a lot of moves here this morning in the food sector. They are downgrading SJM, which is the Smucker company. They are downgrading Dean Foods, which is symbol DF. They are upgrading Kraft, KRFT, and they are upgrading Hershey's, which is HSY. So a couple of food stocks are upgrading, a couple of food stocks they are downgrading. Panera Bread, PNRA, getting an upgrade at Wells Fargo. You've got Rite Aid, which is an interesting chart. It's getting upgraded at JP Morgan. And then you got Nomura basically initiating the entire biotech sector. They're initiating buys on Biogen, BIIB, Celgene, CELG, Gilead, GILD. So these analysts are just crazy this morning. There's so many upgrades and downgrades. You see anything when you're flying through those charts that you want to go back to, Joel?
No, nothing super interesting. I mean, the CME was sitting on pretty good support here, just above the $77 level. Well, we have taken that out, so it'll be interesting to see if we can get back above yesterday's low, 77.29. That's a level. But before we bring Brian on, I just wanted to talk about a couple moves yesterday, and we put a lot of emphasis on the analysts upgrades and downgrades, and obviously the Google upgrade by Morgan Stanley worked out pretty well. But look at the price action that you had in LinkedIn. The thing was getting just pounded in the early session. It'll pre-market under $200, but look what that thing did.
Wow.
Yeah, dude. I mean, I'm not sure what analysts did that, but man, he is probably cleaning out his desk today. I mean, that was one heck of a move for the issue. What do you think, Dad? Do you think they just kind of just people got too short there under that round number of 200 and just took it back up to 210?
Yeah,
Yeah, coincides with a 209.58 high. I think, boy, if this thing gets over 210 here, you could just pretty much look for this trade at maybe 215 back up to 220.
there was some crazy action on all the social media stocks yesterday. They all kind of often move together. Yesterday was not that day. The Momo stocks were all over the place yesterday. Some were up, some were down. We talked about Twitter getting absolutely annihilated. Here's an example going the other way where LinkedIn opens weak and rallies 10 points on you. Facebook was strong yesterday. We didn't even talk about Facebook, but it was very strong yesterday considering Twitter was down. Facebook was trading up again here and got up. It did get up to that level we talked about, though, Joel. It got up to that 58, 55 area where we knew there was resistance from before. So if you were taking a shot up there, you actually had a pretty good number to lean on, and it did work out for you on Facebook. But yeah, it was crazy moves there for most of those social media stocks yesterday. And obviously Netflix. The Netflix move yesterday was absolutely insane, too. You had the huge sell-off there. It's falling through a little bit this morning. So they're kind of not all moving together right now.
No, not at all. Just let's cover two quick issues here before we move on here. Target here finding some support at the 62.50 level, 62.60, 62.67. That coincides with the low that you had 62.50 back at the end of the year. So Target trying to put a bottom in here below 62.50. You could be looking at the $62 level, and another stock don't really follow that much. YY. Oh, YY Inc. ADR. Big move yesterday. I'm not sure what
What's the
that.
symbol on that one?
YY.
Oh, double Y.
Double Y. That had a nice move yesterday over the last 3 days and continuing. $50 now. We're trading above, trading right at yesterday's high. Yesterday's high was 62.95. Sold off a little bit. Got a high in the pre-market. Just hanging out here at 63. So see if you get more follow through that level. We're going to take a quick break here. We're going to bring on Brian Sozzi here, a retail analyst on Wall Street, who's given us some colorful opinions. And we're going to get him on the line, and we'll be right back with you. Welcome back, traders and investors. We have Brian Sozzi, CEO and Chief Equity Strategist of Belus Capital Advisors, who was a guest on our show before. Brian, welcome back.
Hey, how's it going, guys? Good morning.
Hey Brian, how's it going? What's happening with this JC Penney here this morning? It is tanking hard here right now, down at 762, closed 819. What's your thoughts here?
Well, what's going on right now is that our clients are winning because we have a sell recommendation on JCPenney. We pulled the price target 4 months ago, and this is the second straight negative response to the stock on a sales update report. And it's the market's way of saying we are concerned about what the company is doing to regain its customer base, to regrow its sales, or to ultimately drive the improved trends that it noted in its press release. But there's a couple things happening here. Again, no update on the liquidity outlook. And then number two, the release is very scant on details. It's actually, I think, a disappointing release, and I think it's a response to what happened yesterday with JCPenney shares, where they unexplicably declined on good deal volume.
Yeah, because when Brent initially read that report, I didn't see the actual print in it, but it kind of sounded like they tried to be positive.
Yeah, I feel as though the release seems very tempered. And what we need for JCPenney stock, if you are a bull and you want to get working to the upside, you need numbers. You need factual data on these monthly sales updates, specifically with liquidity, and you need to know because liquidity ties into what they're doing on profit margin. And why the stock fell off on the prior sales update is because the market was concerned about JCPenney's profit margins not bottoming yet. So this is, I think, an inadequate press release, and I think the pre-market response is it's correct.
Yeah.
You guys got a sell rating on this stock. Where do you think this is heading here, Brian?
Well, basically it's going to be a tradable stock only if the company can finally show that its gross margins are bottoming and it's on a path to potentially return to positive same-store sales on a consistent basis. Because if the company starts to show those things, you're looking at a fourth quarter holiday season of 2014 that may be much better than the market currently expects. But again, you'd want to wait out until JCPenney shows you really much stronger results to try and pick in the bottom here.
Okay, so you also have a bearish thesis here on Sears Holding, and I caught a glimpse at some of those pictures that you were taking in the store. Did any employee question you or step in, or was just no employees around? You just pretty much have free reign there.
Well, taking pictures has always been a part of what I've done in terms of following retailers. I've been covering the retail sector for 11 years, and the good thing about covering retail is the truth is always found in the stores.
Right.
So it's very easy to go out there and see things or see the financials in a different light. But when it pertains to Sears, these are pictures just taken in normal cars, walking the stores, and I would say that what was tweeted out on Saturday wasn't necessarily shocking. Why isn't it shocking? Because this is the experience that we've come to expect from Sears. I try to see the stores through the eyes of moms and dads across America, and I feel as though they deserve a much better shopping experience than Sears and Kmart are giving to them. There is no reason why when you walk into a Kmart, you should see a milk section or a milk cooler section with no lights on. Because as a consumer, you're thinking, is the milk expired? Am I paying cash for my hard-earned dollars? And you really start to wonder that. So there's one thing to take a picture of clothes laying on the ground. I get it. Consumers certainly outnumber the people in retail stores that are earning minimum wage. But when you see structural issues in the store, let's say very dirty floors or items completely out of place or lights out or wires hanging out of the ceiling, as a picture we took yesterday, it shows how the company's years of massive underinvestment through its capital expenditure line is showing up in the stores and impacting its sales. And we just don't tweet out pictures for the sake of doing so. Kmart has produced 9 quarters in a row of negative same-store sales. It is bleeding money. Sears, out of the last 9 quarters, only 1 quarter has been comp positive in terms of same-store sales. And even then, when it was, it still underperformed Walmart and Target. So the company has a massive market share, and the pictures just help tell the story.
Yeah, well, I was in a Kmart actually about a month ago, and I can tell you, I feel the same way when I walked in that Kmart store. Everything was just a mess. I'm like looking around, and stuff's cheap in there. Don't get me wrong, you can find some nice cheap stuff. But I was buying some type of a reel for my hose, and I was like, I'm looking, and I'm like, well, I don't even see where the price. There's no price on the actual reel, and then I'm looking, okay, it's right above it here, and it says
Mhm.
like it's like $35, and the sticker above the thing. So I bring it to the front. And I get there and it's $55. And I was like, well, the sticker
Mhm.
was right above it. No, it was in the wrong place. So they
Mhm.
don't have the stuff organized and exactly the same thing. The floors look messy. I'm in there. I was like, this is just not a good shopping experience at all. And I was completely turned off. I'm like, I think I'm done going to these Kmart stores. Even if you can get a good
Mhm.
deal, it's not worth going in there when it looks like a dump and you have to fight and try to find what the price of the thing is. It's just confusing for the shopper.
Well, I assure you that your experience is experiences that I'm getting, well, that I've personally had for both these stores going on 6 years. It's gotten increasingly worse. But there's also a mood of the people. What has happened this week on my Twitter feed is something I've never experienced in, as long as I've been on Twitter, and it's certainly as long as I've been in financial services. I would almost call it a social media riot against Sears and Kmart. Finally, it's almost as odd. The consumers have thrown in the towel on Sears and Kmart. They're upset about their buying experience like you had, and they're living through that or living those motions through my Twitter feed. I mean, I've gained close to 500 Twitter followers in 2.5 days. I mean, I'm a pretty popular guy, but I'm not that popular. So the fact this went viral, it's the consumer's way of saying, we've had enough, and you're taking advantage of us. You should be giving us a better shopping experience for our money. And one of the most bigger issues that we've come up to recently is that the company's not stocked necessarily in the go-to categories. Let's say Land's End, or let's say Craftsman. We have the visuals to flesh this out, and when you're not properly stocked in assets that you're putting up against to borrow liquidity, it's concerning because those assets lose value over time because you're not delivering the experience to consumers. I mean, there's a lot to digest there, but the bottom line is years of capex and neglect finally show up in the stores in a big way.
How did you gauge the response from the company? They got on the wires pretty quick, and I don't know if it was a real well thought out response.
Well, no, and I'll pick on a point. One, I've always held myself the highest ethical standard in financial services. That's why I was a ranked analyst, and that's why I'm on board, and that's why I do what I do in terms of media appearances. I mean, I'm not some rookie kid taking pictures out of Sears, and that's why it's always important to any research we provide to clients. In addition to taking pictures and videos from the field, I call it investigative research. We put the facts, the financials. This stuff is free to view. Everyone of your listeners know you can go to sec.gov and pull up these numbers. But the response is very disheartening. To have the head of PR come out and say these things as he did on Twitter and then start to do rounds of interviews behind the scenes saying really vicious things to a person presenting facts is extremely disheartening, and I viewed it as very unprofessional. But it's also very indicative of a company that can't fight the facts. These are the facts that they produce, to their actions, to the lack of underinvestment, to the not caring of the consumer. These are numbers that I created. I didn't create the stores. I didn't control the CapEx budget. So this is just me presenting the story of why Sears stock is down 76.10% since the April 2007 high, and down 30% since our initial research went viral on October 29th.
What's it going to take, Brian, for this company to turn this around? They got to obviously get up there, clean up the stores, but what's it really going to take? Can they turn this thing around?
For a long time, I felt that that this company is not. I don't think it's going to be able to survive. I will feel as though what you're seeing is a slow wind down in two national iconic chains in Sears and Kmart. They're selling off assets to raise liquidity, and there will come a point when you have to start relying on your operations to generate cash. There's only going to be so much borrowing you can do or selling off of quote-unquote attractive land. And I feel as though right now that the stores, even if they were to start aggressively investing in them, which is not going to happen because they've given no indication in terms of their actions and in terms of the comments from CEO Edward Lampert that they're going to do that. I feel as though they're just letting the stores die each day. It's very disheartening because these are the companies that we've been to. But I feel as though the company is starting to head down a path of not being in business, let's say, in 5 to 10 years. As Sears and Kmart shrink their chains, you have Walmart and Target aggressively growing their chains in large store formats and even smaller store formats. It's just not a good outlook. It's not a recipe for success.
And what about the burn rate now for them? I mean, you mentioned
Hmm.
5 to 10 years. I mean, the way they're burning through cash right now, do you think it could be less than that?
I would say it could be. As I've learned anything from retail in close to 12 years, uh, when the market smells a liquidity issue, you can use JCPenney as an example. You can certainly use Barnes& and Noble, not Barnes& and Noble, Borders Group as an example. When they smell that, it causes a whole chain of events. You can have your payments tightened with your vendors. Now, I'm not saying none of that's happened yet at JCPenney, but on Sears. But for anybody who would be concerned about something like that, look at the company's bond yield or debt yield. The yields on their debt maturing in 2018 have crept steadily higher since the middle of last year, and nobody's talking about it. And I think that's a great sign of the market starting to get concerned about the company's longer-term liquidity outlook. At some point, like I said before, you will need to start generating strong cash from your operation, like most healthy companies, to stay in business, because you're going to run out of assets to sell to the market.
Do you put the blame on Eddie Lampert? I mean, should he step down? Would that help the company? I mean, but if he did step down, I mean, would anybody
Mhm.
want the job?
Yeah, I feel as though if anybody, for Spears to ultimate, in a best case scenario, best possible case scenario, he would have to step down and then divest his stake or sell his stake in the company, and then if that were to happen, then you'd be thinking about a company that maybe could be at a turnaround. But there's no indication he's even thinking about doing any of that. And if he were to step down as CEO, the company still owns, I believe, through ESL, 55% of the business. So you're going to go bring in a CEO, just like they were doing before he took the helm in February 2013, who's still going to have to answer directly to the man who is not running the business correctly, in my opinion. I would personally love to know how many stores he does walk on a given year, or a given month. Is he like former CEO of Walmart, Mike Duke, who's walking hundreds and hundreds of stores a year? I don't think so, because if he did go to these stores that I'm getting Twitter responses from his consumers, you can see what's happening, what the years of underinvestment are causing.
Let's move on here, Brian. Let's move on just to some of the other retailers, because you do cover a lot of other retail stocks, obviously. We just came out of the holiday season, and obviously we're not loving the Sears Kmart story, but is there any good stories coming out from the holiday season? Was there any stores that looked like they had pretty good holiday sales and could be decent investments at this point?
I think last time I was on with you guys, I mentioned Foot Locker, and they had a great, I think, pretty very strong holiday season. So on Black Friday weekend, anytime we seem to visit the malls and talk to contacts throughout the season, the lines were very strong with Foot Locker. And that's a company benefiting from a product innovation cycle from Nike. Nike seems to turn out products every new week, and Foot Locker is the ultimate beneficiary. Another one would be, I would say, Dick's Sporting Goods. A lot of out of stocks, specifically in the higher price Nike and Under Armour collections during the holiday season. North Face, I think they benefited from colder weather. And then Best Buy. Best Buy was our top pick in 2013. The stock was up, I believe, close to 250%.
Wow.
And their holiday season, they've done a lot of things right during the holiday season. They've reconnected with their customers, customer service better. They've now introduced in the past couple weeks closeout merchandise, which will help them reduce costs further and help improve their price perception. So I think those are three good ones as well.
Okay, and what about on the flip side there? What about issues that did do so well over the holiday season?
Well, one would actually maybe two would be Walmart and Target. I continue to be on the record of saying Walmart will issue disappointing guidance in the middle of 2014. I think they had a buildup in inventory. They mismanaged the response to the consumer, which their customer continues to struggle. And then number two would be Target, another stock we rate sell for clients we have for the past 6 months. They obviously with the credit hacking scandal, that was a big problem. But even there too, that customer, which averages about $55,000 a year in pre-tax income, I feel as though they didn't respond necessarily correctly to holiday season items, and maybe there was a little more inventory after the season than they would have liked. And then ultimately with Target, their outlook could be very weak for come middle of February because of the Canada business. We're getting pictures from sources in Canada that show that the business is still not structured correctly, and they're having to wind down inventory very aggressively and completely reset an operation that they just went into. So I'd be looking out for those guys.
So they're having troubles getting, because I know they came in, I think they bought the Zellers brand, correct, in Canada, and they're trying to, I'm here in Windsor, and they actually shut down, there was 3 Zellers, and they shut 2 of them down, but they put 1 Target. But they're having trouble in the Canadian market, you thinking?
They are, and they guided that in terms of expectations on the third quarter earnings release. So the market our market understands the issue, but what I'm worrying about, do they fully appreciate it in the stock price? Because the stock is surprisingly, despite hacking scandal, despite the fundamental issues in Canada that I think are a lot worse than the company has guided with to its investor base, it just isn't reflecting the stock, and I'm concerned about that because the market, it's hard to get into a market where you've never even operated before. And I feel that they oversold the street, and the estimates need to come down further.
What about Macy's? That stock has had a nice run. What's your outlook on Macy's?
Well, we have no rating on Macy's, but I would say that if they should be one of the decent holiday season performers. Macy's was in very much the right category. The Michael Kors handbag, and I know that stock got downgraded, but it got downgraded on valuation. The valuation has got excessive with Michael Kors because they're winning in the marketplace. So Macy's benefits from that. The watch section continued to do probably well. Macy's probably had an okay holiday season. I don't believe they are going at risk of missing their earnings. The thing with Macy's and many retailers, are they going to issue positive outlooks in the middle of February? And it's hard to come out and say that at this point.
What about Lululemon? Do you cover that one there, Brian? Because it obviously had the big sell-off back in mid-December. It's consolidated now here for about a month. What's your outlook on Lulu?
Yeah, we've been negative on Lululemon. I mean, I wish I had more positive news. I've got some bad news for you guys. Some more positive news.
I know what's going on with you, Brian? Dennis is not going to talk to you anymore.
I don't know, but I would encourage you. Go Google search me, type Brian Sozzi, Lululemon. You can see the comments we've made on this company. I'm not pulling that out of thin air. But Lululemon, it's a stock that's valued very aggressively in terms of what's likely to happen over the next couple months. Yes, the new CEO's in there, but there is market share being taken away from Lululemon, in my opinion, from Nike and Under Armour. Those two companies, which are much larger than Lululemon, have started to put out better products in the yoga category, even athletic wear, which Lululemon is. It's athletic wear at the end of the day, inside of Dick's Sporting Goods. So I think that they are now much better, credible threats. For Lululemon stock to work, I need to see a reacceleration in same-store sales, and then I would maybe become a little more positive.
So where do you shop, Brian? Where I mean, you look like in your picture, you look like a pretty snazzy dresser there. So are those
Thanks, guys.
Snazzy Sozzi.
It's snazzy Sozzi. What is it? You probably got like custom made suits and things like that. No,
man, the people, guys. Man, the people. I Macy's, and if I'm going to splurge, Bloomingdale's. It's all about savvy shopping. So you have to know where to get your slim fit ties, and definitely nobody's ordering me clothes or
I see now.
laundry.
Brian likes the retailer outlets where the condition of the store isn't important regarding the company's current state of affairs. So you're probably checking out like the Saks outlet and the Ralph Lauren outlet, and it doesn't matter if the clothes are all over the floor and the place is dirty.
So yes, outlets you should expect a certain experience, but I will offer this: the outlet experience has improved greatly than, let's say, when we were children, when the stores were absolutely messy. Now you have companies designing product directly for outlets such as Coach and Gap, and they look much cleaner, and they certainly look much cleaner and structurally correct than what I've seen at Sears over the past couple months.
Okay, well, we got an update on the Sozzi shopping spree here. Just overall, you kind of have just a little bit more bearish tone here with the retailers. You have and I don't know how you forecast that with the overall market. Right now it seems like the social media stocks, some of these are kind of losing its luster, and now now you have some of the financials taken off. I mean, what do you think? Do you think this has, just from your thesis that you have with, some of these retailers, I mean, do you think this economy is just kind of stalling out here and that it's for a change in the trend of the market? Or do you think there's other ones that are picking up the slack and we're still, good for Dow 20,000?
Well, one key stat that I'm watching is consumer credit. it's basic, but it's extremely, extremely important for retail stocks to work. And obviously, you want to watch charts, you want to watch price action, and you want to see the price action starting to improve in these retailers. And the only way that it can improve, I think, is if we get a better sense that consumers are not spending outside their means, but charging those three pairs of pants. And if you look at the revolving credit data, you still haven't gotten that feeling that the consumer is willing to go beyond its means. And then anecdotally, when I visit, let's say, dollar stores, I've been noticing buildups in inventory in Family Dollar, Dollar Tree. And to me, that tells you that there's a dark underworld to, let's say, an economist's forecast of 3.5%, 4% GDP growth. There's a dark underworld to an ADP report today at 238,000 of consumers continuing to struggle to make it paycheck to paycheck. And even I'll call out what's happening with the payroll, with unemployment expiration. That's causing fear amongst many, many people unemployed. And with that fear, you tighten your budget even further. And I think of all of that, it shows up in the tones of retail management teams we talk to. It's certainly shown up in our outlooks. Most of these companies, the majority of retailers, disappointed consistently in 2013 in terms of their outlook. And for the stocks to work well, I just need to see them selling more items at full price. And to me, most of the retailers, let's say outside of a Foot Locker, are continuing to have to do more to get the customer in their door, give away more margin just to grow their sales just a little bit. At some point, that hopefully will improve, but I just need to see the better price action in the stock.
Okay, all right. We've had Brian Sozzi on, CEO and Chief Equity Strategist of Belus Capital Advisors. Very lively interview. Thank you so much for sharing your opinions on the retail stocks, both positive and negative. We'll keep an eye on the trends that you're talking about here, and we'd certainly like to have you on again.
Thanks, guys. Hey, and avoid that polar vortex. It's pretty brutal.
Thanks, Brian.
Okay, we're going to move on now with the morning headlines with Mighty Joe Young.
Well, thank you very much, Joel. We love Brian Sozzi here at Benzinga. He is one of our absolute favorite analysts. We love having him on the show. I bother him all the time. He finally got to a point where he said, like, dude, I'm busy for the next 3 weeks around Christmas, okay? Get back to me after the new year. So that's what I did. Brian, thank you for coming on the show. We really appreciate it. Hope to have you back again soon. Moving into today's headlines from around the globe, the polar vortex is setting records and causing pain. Authorities reported at least 21 cold-related deaths across the country since Sunday, including 7 in Illinois and 6 in Indiana. At least 5 people died after collapsing while shoveling snow, while several victims were identified as homeless people who either refused shelter or didn't make it to a warm haven soon enough to save themselves from the bitter temperatures. That is not including the number of automotive deaths, like Shubs' car here in his driveway yesterday. The price of oil rose above $94 a barrel on Wednesday ahead of a weekly U.S. stockpile report, and with U.S. demand for heating fuel expected to rise amid severe cold weather. Benchmark U.S. oil for February delivery was up by 39 cents to $94.06 a barrel at mid-afternoon Kuala Lumpur time. In electronic trading on the New York Mercantile Exchange, the contract was up by 24 cents to close at $93.67 a barrel on Tuesday. An estimated 190 million people in the U.S. were subjected to the icy blast caused by a kink in the polar vortex, the strong winds that surround the North Pole. Authorities said the worst should be over in the next day or two. Warmer weather, at least near or above freezing, is in the forecast for much of the stricken part of the country. Analysts and investors are waiting on the U.S. government's latest crude inventory report, which is likely to show a fall in stockpiles last week, indicating stronger demand. Facebook acquired a technology startup in India as the largest social networking service seeks to bolster its presence among mobile device users. Facebook bought Little Eye Labs, which develops tools that Android application developers can use to analyze and enhance efficiency of mobile apps, the Bangalore, India-based company said on its website. Financial terms weren't disclosed for Facebook's first purchase in India, and Carson Dalton, the India spokesman of Menlo Park, California-based company, decided to comment on the terms of the deal. Declined to comment on terms of the deal. If this company helps you analyze the mobile apps and usage patterns of users, it would enable doing data analytics. That is extremely important information for advertisers, said Urmil Shah, a Mumbai-based analyst at Kim Eng Securities. There's ultimately where Facebook would make money. Sony used the high visibility stage of the 2014 Consumer Electronics Show to announce a new internet streaming service that will deliver games beyond the video game console. Sony will offer popular PlayStation 3 games via the internet to the latest video game console, the PlayStation 4, and to the PlayStation Vita handheld device. The service ultimately will reach beyond traditional game systems to allow gameplay on internet-connected televisions, smartphones, and tablets, said Sony Computer Entertainment Chief Executive Andrew House in remarks made during a keynote presentation Tuesday in Las Vegas. PlayStation Now will stream on smartphones or other devices. House said that PlayStation Now will be tested in parts of the United States later this month, with the service launching in summer 2014. Twitter co-founder Biz Stone left the company a while back, but today he has announced a new venture called Jelly. Jelly is an app that you can use to ask questions with pictures on your existing social networks. It is launched on both Android and iOS with a slick UI and interesting approach to social networking. Jelly plugs into Facebook and or Twitter to leverage your social network to answer questions. The experience is centered around pictures in Jelly. You can snap a photo in the app, add some annotations, crop and attach your question. You can take a picture of a plant and ask people what species it is, or post a snapshot of a restaurant and ask what's good. The post will be available inside the Jelly app for your friends to answer. The White House is bristling over former Defense Secretary Robert Gates' new memoir, accusing President Barack Obama of showing too little enthusiasm for the U.S. war mission in Afghanistan and sharply criticizing Vice President Joe Biden's foreign policy instincts. In a book set for release next week by the publishing house Knopf, Gates writes that Biden is a man of integrity but also a political figure who has been wrong on nearly every major foreign policy and national security issue over the past 4 decades. Gates, a Republican, also slammed the National Security Council under Obama's watch. The Republican cited what he called the controlling nature of the White House, writing that Obama's national security team took micromanagement and operational meddling to a new level. The National Security Council issued a statement late Tuesday asserting that Obama relies on Biden's good counsel every day and considers him one of the leading statesmen of his time. Not only that, the White House issued a highly unusual invitation for news organization representatives to photograph Obama and Biden sitting together Wednesday at their weekly private luncheon. It was another sign that the president was not putting any distance between himself and Biden. At least 38 million adults drink too much, and most are not alcoholics, according to a new report from Atlanta-based Centers for Disease Control and Prevention. Drinking too much includes binge drinking, high weekly use, and any alcohol use by pregnant women or those under the age of 21. The CDC describes binge drinking as men drinking 5 or more alcoholic drinks, or women drinking 4 or more in about 2 to 3 hours. Such drinking causes about 88,000 deaths in the United States each year and costs the economy about $224 billion annually, the CDC reports. Despite the wide use of alcohol, only 1 in 6 people has talked with their doctor or other health professional about alcohol use, the CDC adds. Today's trivia tidbits. Does anyone know who this person has passed away, but does anyone know whose birthday was today?
Wow, Joe, you really narrowed that one down
I know.
for us.
I'll even give you the year that he was born, all right?
Oh, yeah.
And note that I just gave away that he's male. 1935, on this day in 1935, who was born?
Any pet? Is he?
Had a twin brother that died at birth, right?
He took his middle name. He took his name as his middle name.
I don't know. You got me today, Joe.
Passed away in 1977. Elvis Aaron Presley would have been 78 years old today. That's right, January 8th, 1935, Elvis Aaron Presley was born. Well, no, he took his brother's middle name later on, right? And sadly died too soon at the age of 42 years old. Oh, Fernando just popped in on Skype with a guess. Fernando, you were correct, but I already gave away the answer. And let's see, what else do we have on the docket for today? On January 8th, 1941, William Randolph Hearst stops Citizen Kane ads. One of Hollywood's most famous clashes of the titans, an upstart boy genius filmmaker versus a furious 76-year-old newspaper tycoon. Heated up on this day in 1941 when William Randolph Hearst forbids any of his newspapers to run advertisements for Orson Welles' Citizen Kane. That wraps it up for today's headlines. Just a reminder, ladies and gentlemen, that this show would not be possible without our dear friends at OptionsHouse, who will give you 150 commission-free trades just for signing up for an account through this page. So go ahead and click on the links. There's a button at the top, button at the bottom right of the page, and anywhere else you can find one. Sign up for an account through OptionsHouse and get 150 commission-free trades just because you listen to Benzinga's pre-market info. And now I'm handing it over to my man on the desk, Brentislava.
That is me.
That's right. Now, once again, like yesterday, we covered a ton of rating changes before your segment, but I'm sure you've
Holy
got some
cow.
that we didn't cover yet, right?
I was just going to tell the viewers to grab some popcorn. I got a boatload of ratings. But I have an idea, Joe.
What's that?
What if we started maybe like offering something to the chatters if they can correctly answer the tidbit trivia? Huh?
Oh, yeah.
Ah.
What would you have in mind? What should we give them, Brent?
Well, maybe we should talk about this like off air so
Okay.
that we don't give away any of our secrets.
And then we
but-
also have to find a way to incorporate the audio delay for the chat so they actually have a legitimate chance at answering the question properly. What
All
do you
right.
say?
all
Yeah,
the
we'll
viewers
discuss-
out there, we're going to figure this out.
Yeah, we'll discuss this off the air, and hopefully by the end of this week we can implement prizes for the Options House pre-market info chat room.
That's
so
pretty exciting, right?
we're going to start doing trivia, and you guys better study up, all right? Mostly with pop culture, generally in the music realm. If it's sports, I will veto it, and there won't be a trivia question that day.
Maybe we can have Shubs come on and give the sports trivia.
We could do that. Okay.
All
All
right.
right. All right. Take it away, Brent.
All right, so go on with the upgrades, downgrades. Some of the top upgrades this morning, we did have Wells Fargo on Panera upgrading the stock to outperform. We had an upgrade on shares of SAP at UBS firm, raising the rating to buy there. We got an upgrade on shares of Union. Ow! What was that? We got an upgrade on shares of Union Pacific by Bernstein this morning, rating that stock with an outperform, and then Citigroup putting on a bit of a pair trade this morning, upgrading shares of Nasdaq to buy and downgrading shares of CME Group. Getting a little ahead of myself there, but that's okay. Deutsche Bank on the food sector this morning. We talked about this one a little bit earlier. They upgraded shares of Hershey's to buy, upgraded shares of Kraft to buy, and downgraded shares of both Smuckers and Dean Foods to hold. Rite Aid getting an upgrade at JP Morgan firm, now rating the stock with an overweight rating. Rite Aid did have some same-store sales data out yesterday, I believe it was. Wait, nope, I must be thinking of something else. Correction on that one. Howard Wheel upgrading shares of ExxonMobil to sector outperform. I was hoping we were going to be able to cover that one a little bit earlier, but just got bogged down with a ton of other things. Moving on to some of the top downgrades this morning. Citigroup downgrading shares of United Technologies, that's ticker UTX, to neutral. Also downgrading shares of Honeywell to neutral. And then getting back to that food sector on Wells Fargo, McDonald's downgraded to outperform at Wells Fargo. We did have a downgrade on shares of Twitter this morning. We've seen a number of downgrades coming through this week and over the last couple weeks. Today it is Cantor Fitzgerald Company firm downgrading shares of Twitter to a sell rating, maintaining a $32 price target. JP Morgan downgrading shares of Clorox to underweight. And we did have two downgrades on shares of Transocean this morning. RBC Capital downgrading shares to sector perform, and then a firm called DNB Markets downgraded shares of RIG to sell. A couple notable new coverages this morning. We did have Jefferies initiating coverage on a few of the banks. Citigroup was the only hold rating that I've seen. They placed Citi shares with a $60 price target. We did get buy ratings on both Bank of America and JP Morgan from Jefferies. JP Morgan price target there is $66. The Bank of America price target is $19. And then had a sector-wide new coverage on the pharma sector by an analyst over at Nomura. A couple of the highlights there: Biogen with a new buy rating and $368 price target. Celgene with a buy rating and $236 target, and shares of Gilead with a buy rating and $118 target. And then a couple of neutral ratings here. Biomarin, that is Bravo Mike Romeo November with a neutral rating and $76 target, and also Amgen with a neutral rating and $131 target. Just one quick heads up before we get over and prepare for the open. We are going to get the payroll figures on Friday of this week. We did just get the ADP number a little bit ago at around 8:15 this morning. That was a higher than expected change. We're going to get initial jobless claims for the week ended January 4th tomorrow at 8:30 a.m. Economists are around 335,000 right now. And then we're going to get the non-farm and private sector payroll reading at 8:30 a.m. on Friday. Let me see. It looks like I'm comparing the estimates from yesterday. It looks like the street has not yet changed on the non-farm number. Still sitting around 195,000 for the month of December. However, looks like the private sector number has bumped just a few higher. It was at 195,000 estimate as of yesterday. Now we're around 197,000, so that one increasing a little bit. And looking for the unemployment rate to stick around 7%. We got about 10 minutes before the open. Hope all the traders are ready to go for the day. I'm gonna pass it around and let Joel and Jake, Shaky Jake, Snaky Jake, I don't know, you guys make up a name for him. He's going to do something, though.
Hey, well, now we're going to get Jake on the line, who's not only a radio personality, but now is a TV personality who was on, what were you on last night?
CCTV. It's the Biz Asia America. It was the program I was on.
I didn't know you spoke Chinese.
Ironically, I was actually speaking English the whole time.
And what did they have you covering?
So it's covering the recent cold spell and the effect it's going to have on the economy as a whole, and kind of looking at consumer spending and sectors and things like that.
And what were your conclusions?
Well, we're looking at if you look back to 1949, the day that we've seen as far as the how cold winters are. The last 4 winters were actually unusually warm, like ridiculously warm, essentially, like way outside the mean. So this winter as a whole feels really cold to everybody, but in fact it's much closer to the mean. But the thing is that a lot of the data for the winters is actually seasonally adjusted, and when you have that many winters in a row that are actually unusually warm, the seasonal adjustments are actually higher than expected. So now we don't actually have the adjustments in place, so we could very well get a little bit of a miss on Friday because of that. I know Goldman Sachs lowered their estimates from 190,000 to 173,000 jobs added for that report on Friday because of this. When you have colder winters, you can have less, brick and mortar retail spending. Less people want to go out to the stores if it's cold out. It's as simple as that. This recent polar vortex, or whatever they're calling it, was 3 days long, so it's not exactly enough to really shut down an economy or really do some serious damage. But if you have continued effects for, let's say, 5 to 10 days, you're definitely going to see some impact on the month of January. I know they're talking about crop prices rising, specifically corn, and then with the feeds rising, that's causing cattle prices to rise, and it's more expensive to ship cattle because you have to keep them warm.
Right.
So there's a ton of effects of a colder winter. It's really kind of there's no one that can escape the cold weather, to be honest.
So you're looking for a little bit of a short-term effect on the unemployment data coming out this week, but longer term, this cold spell wasn't long enough to really
This
have
specific this super cold spell, is like ice spell, I guess I would call it. The last 3 days shouldn't do that, but if we continue to have this unusually cold winter, at least unusual for the last 5 years or so, then you're going to see a little bit of an effect on crop yields, which will then cause cattle prices to rise. And if you have all those prices rising, hey, you might get margins lowering at restaurants. There's a kind of a big ripple effect from that.
Okay, all right. So what do we have for morning movers?
Well, there's a lot moving out there. Obviously, we had the news from Alan Mulally yesterday. I think that's absolutely huge. Alan Mulally saying he's going to stay at Ford, saying he is not considering making the jump over to Microsoft. That's been one of the biggest ongoing stories for the last couple of months, of whether or not he's going to take on his third major company there and see if he can turn it around. He knocked out Boeing. Now he's at Ford. Did quite a job there, and people were kind of wondering maybe he does the same thing at Microsoft and becomes perhaps the best turnaround CEO of all time. Guess he decided to turn that down, and so Saw a spike up in Ford after the close yesterday. I don't know what you're seeing in shares of Ford. We saw a rally of was it about 1 point, I think 4% last time I looked, and then we saw a little bit of a dip in Microsoft, but nothing too crazy. I think it's 0.6% is what we saw in Microsoft.
We talked about Ford double top 1574, 1576. Perhaps a seller looking around at that area. So that's the area resistance you need to take out to get back to the $16 level. And we had talked about Mr. Softy. They really shellacked this thing in the pre-market when that news came out. They took it down to 35.40. What a huge move! I did just to have Microsoft trades millions and millions of shares a day to have it go that low. Little bit surprised that, but it's now leading on this $36 level. So it is theoretically opening up support, but if it doesn't get a good 10, 15, 20 cent bounce on this, we could be traveling under 36. You did have that low at 35.40 in the pre-market. Also, you had a low at 35.53 on December 18th. So, couple levels to keep an eye on if this continues in Microsoft.
Another one I want to take a look at is Micron Technology. They reported earnings after the close yesterday. That's Mike Uniform for anybody following along on their own charts. EPS came in at 30 cents versus expected 42 cents, while revenues came in at 4.04 billion. It looks like our estimate's a little bit off in the calendar. I have to update that. But the revenue was a slight beat, while EPS was actually said it didn't compare. In the report. So we actually have quite a rally going on in Micron right now, up over 11% in the pre-market. So obviously there's some items there that traders are really latching onto. We had Stifel and Nicholas maintaining their buy this morning while bumping that price target to $31.
Wow.
And then you had a renewed DRAM pricing after the close yesterday or before the open yesterday. So a couple of pieces of bullish news. Just some things to watch. Morgan Stanley also reiterated on their buy on or not buy the overweight or equal weight. I'm sorry, missing everything here.
Yeah, 24.48 was the high that you hit at 5 a.m. this morning. Since then, you've got a little pullback, not much of a pullback to 23.59, and now you're back above the $24 level. 24.16 is the last trade. It should be interesting on this one because there's got to be some, this is a stock that trades a lot of volume here. Probably a lot of GTC orders in the 22 handle, 23 handle, 24 handle. So I don't know. To open this thing above 24, man, there's going to have to be some huge buyers willing to buy Micron Technology on a 2-point gap. I guess if you are going to go be the Momo guy and play it that way, 23.60 is the lowest it's traded here. Really since in the last half hour or so. So if you are playing it from the long side, 23.60 takes out. There could be a lot of air underneath.
Continuing the earnings trend here, Apollo Education Education Group, APOL Alpha Papa Oscar Lima, for those of you following along on your own charts, reported earnings after the close yesterday. EPS coming in at $1.04 versus the 90-cent estimate, so a nice beat there. Revenues coming in at $856.3 million, slight miss below the expected $860 million. Shares are up this morning, gaining almost 10% now. Looks like they might be eyeing that $30 level too. Joel, any thoughts on this one? I mean, that seems like that'd be a big psychological level for it to break. You do have an earnings beat, so you got a little bit of a catalyst. What do you think traders are going to do with it?
30 and a quarter is the pre-market high. That's a nice gap up from the close. So we'll see. I mean, there's got to be, once again, like with the Micron Technology, could be some stock in there to keep it down. Perhaps open at 30. Did had a high at 29, and we've smartly taken that out by quite a bit. Keep an eye. I mean, if you're looking for a target, I keep an eye on that pre-market high at 30 and a quarter as an early entry point.
Another
Exit point.
Exit point. All right, so we'll keep that in mind. Kind of want to jump over to this morning and take a look at some of the earnings reports. So nice having earnings back now. Just a couple companies here and there, at least. Nothing too crazy yet, but something to watch. Monsanto did report earnings this morning. That's Mike Oscar November there. EPS came in at 67 cents, which expected 64 cents, so a beat there. Revenues were also strong, 3.14 billion versus expected 3.08 billion. So you're getting a little bit of action this morning. in Monsanto up not quite 1%, but you are above 114 bucks now. Joel, any thoughts on this one? Not a whole lot of a reaction following that earnings report, and it was down on yesterday's session. Maybe this will
What's the
give
symbol on that one?
Mike Oscar November MON.
MON. Okay, I should know
Yeah,
that
so
one.
this is a St. Louis-based company. They make a lot of genetically engineered crops. Is kind of what they're known for. They do fertilizers. They do anything supporting the kind of farming industry. So they, you could say that they could theoretically benefit from this cold spell if a bunch of crops get wiped out. Farmers have to rebuy all their supplies of seeding, and that's where Monsanto makes their money. So.
Yeah, they're getting a pop up here. Let's see. We've traded 114.22 in the session. Opened up at the 114 level. Pull back. I don't know. I guys think you need to get back to that opening print there. 114.02, 114.22. After that, you could make a run at the high that you had yesterday's session, 115.05. Kind of a steep 2 day sell off after making probably a new all time high for the issue. So keeping an eye on that the current high 114.22. If not, it opens up to the $115 level.
Looks like it was kind of keeping it down right now as they did guide slightly below street estimates for its fiscal year 2014 EPS. $5 to 5.20 is what they guided. Street was looking for 5.33, so it's not anything wildly below the street, but it is a little bit, and I guess the traders aren't really willing to bid it up on that. But so that's just something to kind of keep an eye on there. Um, Another stock that you could say maybe benefited from the cold would be Constellation Brands, one of the alcohol brands. I mean, you're a lot of people trying to warm up from the cold, and that's one way people do it. They did report earnings this morning. That's Sandy Tango Zulu. For those of you guys following along on your own charts, STZ EPS came in at $1.07 versus expected 91 cents. So nice beat there. Revenues come in at 1.44 billion versus expected 1.38 billion. So Constellation Brands with a beat there. Company did not give us any guidance yet, so we're kind of waiting for that. That could show up in the call this morning, so we are going to be watching out for that. Shares are not exactly moving a whole lot after that, which is kind of surprising. Maybe it's just from the thin volume. But Joel, any thoughts on STZ here?
Yeah, taking a look at wow, gapped up. Oh, nice gap up. Closed at 69.93. Opened up 74.81. Ticked down a few cents. Now off to the raises, making 75.50 high. So boy, what a move in that. Let me see if we can get a longer term perspective on this one. Boy, this is could be a new all time high for the issue. So oh boy. What a move here. I mean, nothing stopping this thing. I don't know, $100. I don't know. Get a little carried away here. 75.50. I guess if you are playing this from the long side or it's something that's in your portfolio, opened up right near the low. So just play it close to the belt. If it breaks below 74.61, you could see some downside action.
Another one that we're looking at this morning is Rite Aid, Romeo Alpha Delta, for those of you following along on your own charts. There was a report out this morning from JP Morgan bumping the stock up to an overweight rating from a neutral rating. They also gave it a $6.50 price target. Now, the stock currently trades at about $5.50, so that's a dollar upside. So some serious room to run. Basically, JP Morgan is focusing on ACA, also known as Obamacare, in the media and saying that that's really going to benefit drugstores, specifically Rite Aid, saying Rite Aid is well positioned for that. They say that there's going to be incremental volume increases from the ACA related coverage gains, is what they're saying. And they also think that some of the wellness remodeling focus in the stores themselves is going to help the company. So Rite Aid getting a little bit of a boost on that. Joel, what are you thinking here? I mean, we're seeing a little bit of a rally. It was about 3.4% or so, 18 cents or something.
Big resistance here. 550 current high in the session. You also had a high going back a few sessions ago at 551 and 552. So if in fact you could take that out, get above 552 here, things kind of open up. I mean, you had a real bad day, or 2 days, cutting down between 6 and 550. Now if you can get back get back above that 552. Could be some room on the upside. You got a small gap to fill at five. Well, no, that wasn't a gap down day. It was 550. Yeah, it was 558 fills the gap. But after that 558, you got to close at 576, 582. But first, we got to get through this 552 level.
Absolutely. I kind of want to take a look at a couple of the other drugstore names because you know that call as a whole, it was more on it seemed almost more on the industry. Yeah, like they said, Rite Aid is well positioned to take advantage of ACA. Well, why wouldn't Walgreens or some of the other names? Walgreens is actually trading down right now, 0.5%, which is kind of surprising. I would think traders would be looking at that report as a whole. That's Whiskey Alpha Golf for anyone following along on your own charts, down about 0.5% here. Nothing too crazy, but that J.P. Morgan report is focusing on a structural item in the U.S. economy that's going to bump Rite Aid. Well, I guess I'm kind of confused of why they don't think that's going to bump other drugstores up, but definitely something to take a look at here.
Those stocks have had just major runs, and so maybe that Rite Aid, they're kind of looking at Rite Aid as a laggard, and maybe they're where they're positioned with their stores and stuff. I don't see it. You see a Walgreens and a CVS just about everywhere you go, so I don't see how it's gonna wouldn't benefit the other ones as well. From a technical perspective here, you did trade close to yesterday's low in Walmart. 57.10 was your low yesterday. You hit 57.13 in today's session. So if you're a Walgreens long, you want to see this level hold. If not, you could be trading under $57 up to 56.71. Haven't taken a look at CVS in a while. This stock also had it's had a nice run over the last couple years. These things really move together. I don't see what this stock right here trading right same situation here, trading on yesterday's low. Yesterday's low was 69.22. Actually, you got three lows here in CVS between 69.22 and 69.30. That level absolutely has to hold here, or you're going to get into a vacuum area. I don't know if there was earnings related or not, but under this support level doesn't hold over at 69.22 here. A lot of room underneath down to 67. I don't think it's going to have the gas to get there today, but keep an eye on this one here over the next few days.
Looks like we got a little bit of a move in Yelp this morning. That's Yankee Echo Lima Papa for anyone following along on their own charts. J.P. Morgan bumping that price target. So I'm seeing here from $75 to $89. So a little bit of a rally in Yelp. We're seeing a gain of over 4% right now. It's above the $75 level, which you would think is kind of a psychological level here.
Wow.
Joel, what are you thinking on Yelp? I mean, this is a name that's been kind of all over the place. I'm just kind of looking at your chart here. I've seen it kind of breaking down back in November, and then what a month in December for Yelp.
I believe this is a newly IPO'd stock, so this probably is an all-time high. Previously, it's struggled at the a little bit lower than this at the 75 level. We have broken out into new territory here, so let it run, let it run, let it run. I think if it came back down under the former all-time high 75.37, I don't know, lot of air underneath that.
We also saw some ratings this morning on Transocean. The ticker there is RIG, Romeo India Golf. Now, this is one of those stocks that Carl Icahn was going after, so I'm kind of interested in seeing these downgrades. RBC Capital downgraded it to a sector perform rating, dropping the price target to $54, while DNB Markets downgraded the company to a sell rating. We'll give you a $45 price target. That's a drop from a $50 price target there. So kind of keeping an eye on RIG here. Down not quite 1%. This one can be volatile. It is a high dividend yield stock, so sometimes people buy it for that one. Joel, any thought on Transocean?
40, excuse me, it had been developing highs in the 49 handle, and it came down 49.22 yesterday's high, 49.10 close. We did get gap lower on this, bounced off 48.56. You've had a couple other lows at the 48.50 level, so that's important to hold. Getting a little bounce now under 48.50 here. We could easily lose another 50 cents in the issue down to 48 even. 48.11 was your low on December 26th.
I want to kind of take a look at. I saw that Bank of America was rallying a little bit this morning too. I want to kind of pull up that chart and see what's going on. Sometimes these financials, yeah, it's up almost 1%. That's not too common for the financials to do that. Maybe it's just kind of following the markets. It looks like Jefferies initiated coverage on the company with a buy rating, giving it a $19 price target. Currently, it's trading, just about 16.70 or so, not quite there yet, but a $19 price target. That's quite a target to put on it. And then we also saw that J.P. Morgan facing a big fine yesterday. So maybe it's kind of a pair trader. Traders are thinking, hey, I want to be in a financial, but I see J.P. Morgan continually getting fined for absolutely everything, and Bank of America seems to not be facing that kind of thing.
You did have that high yesterday at 16.79. Actually opened up right near its high and sold off, getting a little bit of a boost here. Kind of quiet market so far today. Maybe you get a couple days of consolidation, similar to the period that you had back in middle of December before it made its next huge move. I'd still, playing it, if you're trying just to lock in profits here, 1645 was yesterday's low with a 50 close, so that's a doubly good number. That will act as support. If you get that, I think this is the highest this issue's traded in, since 2010? I have to go to the monthlies to take a look on this. Yeah, going back here for Bank America, we haven't seen these levels in the issue since May of 2010. You got up to 1815 in that area. So nice move. And these financials so far have saved the market this year. They've hit some of these other stocks, and these financials have been strong. J.P. Morgan just shrugging off that news. With the Madoff implications. Just want to go to Twitter here real quick.
I was just gonna pull that one up.
Yeah,
that one's moving on a downgrade actually. Cantor Fitzgerald downgraded on excessive valuation. I've never heard that one stated before. So Twitter getting they maintained their $32 price target, putting it from a hold to a sell rating, saying it's found to be excessively valued, and they currently see more material downside than upside, which is kind of shocking. I mean, you're trading at $60 here. But we did get news yesterday. They will be reporting results on February 5th, so we will be getting some fundamentals soon on Twitter.
I like that.
That'll be really interesting when we get. I'm really excited about that conference call specifically. I really want to hear how they operate that. Can't wait to dive into that release and get some more metrics on them. But for now, we've got analyst ratings and we've got street sentiment. So what are you thinking, Joel?
Did they get to tweet out their earnings?
You know what? If I was Twitter, I would. I mean, why wouldn't I?
I mean, that's how they announced their IPO, correct?
Yeah, right. And then everybody just retweets their tweet rather than posting. That'd be kind of interesting.
Cut down on costs, right?
Yeah.
Just looking at this, and 57.92 was the low. I mean, we did take out that low from 58.57. You had that low on December 30th when it had that real bad day. You got back down. I mean, you got through that level, and you came into another number, 58.01. Which was the low on December 20th. You went 9 cents below that, and then you get a nice rebound. So if you were lamenting the fact you covered your short at 58.57, you're probably pretty happy right now as this thing is taking off. Going back into yesterday's range would take another rally up to 61.39. I don't quite see that happening here, but the key level now has moved down from 58.57 down to 58.01 in shares of Twitter.
Well, Joe, we have a couple of questions from the chat room. I think we've only got time to hit one before we close out the show and hit some futures real quick. But MDBX, Medbox, getting a little bit, I believe that's what that is, MDBX. Getting a question here. Mike Delta Bravo X-Ray coming from Jay in the chat room. Just wondering what you're thinking here. I know we've been talking about this the past couple of days. It is really rallying here. Any thoughts?
J-Dot, you got yourself into this one, okay? And I'm going to let you get yourself out of it. I mean, this is just it's tripled in 3 days, right? So it was at $30 bucks, right? I don't know how many triplers you're going to get in your lifetime. I don't know how many triplers you're going to get in 3 days. Okay, I know you're holding on a little bit of a hip pocket, not sure what you have. With your position. 89, 81 is the high. I mean, if you would go the magnet there, you think this thing's going to $100. But man, oh man, oh man, just also since the beginning of the year, what do you have since the beginning of the year? This thing, you got almost a five bagger here. So Bulls make money, bears make money, and
Pigs
pigs
get
get
slaughtered.
slaughtered. So we will end the show on that note. Good luck with that position. Thanks. It helps so much when you guys make contributions to the chat room. We want to know what you guys are interested in and what you guys are trading. Get your order out there at 99.99. J Dodd for that stock that's really taken off. So, good job. Thank you. We'll be back with you tomorrow.